That money in your wallet, where does its value come from? Gold. It disappeared in 1971. Government promises? Those promises were unilaterally broken overnight 50 years ago. Oil, then? Correct. For the past 50 years, the real collateral backing the dollar has been oil. Yet that agreement quietly expired in 2024. The world now faces a new question. What is the next collateral for the dollar? And that answer will determine the value of your money. To find the answer to this question, we must go back 80 years. The world was in ruins. The destruction left by 2 world wars, collapsed economies. In the midst of this, representatives from various countries gathered at the Bretton Woods Hotel in New Hampshire, USA, to design a new world economic order. The agreement was simple. Only the dollar could be exchanged for gold. Other countries' currencies were pegged to the dollar. At that time, 70% of the world's gold sat in American vaults. The world had no choice but to trust the dollar. But in the 1960s, cracks appeared. America covered the massive costs of the Vietnam War with dollars. Dollars printed recklessly. Europe noticed. Far more dollars were already circulating globally than America's gold reserves could back. French President Charles de Gaulle moved first. He loaded dollars onto ships and sent them to America, demanding they be exchanged for gold. Other nations showed signs of following suit. America's gold vault was empty. August 15, 1971. A Sunday night. President Nixon appeared on television without warning, and he declared it. The dollar would no longer be exchanged for gold. The Nixon Shock. The collapse of the Bretton Woods system. A system that had been the foundation of the world economy for 27 years crumbled overnight. The world was stunned. America had unilaterally broken its promise. There was no going back. The world expected it. The dollar is finished now. But something strange happened. No one abandoned the dollar. There was no alternative. The euro didn't exist. The yuan was still insignificant on the international stage. The world was angry, but had to keep using the dollar. Each nation's true thoughts were the same. America broke the rules, but we don't have the power to fight right now. Let's wait and see. And so 50 years passed. And 37 more years passed. 2008. Lehman Brothers collapsed. Wall Street watched itself crumble live on screens across the world. America's giant banks lined up to request government bailouts. The world's most sophisticated financial system had destroyed itself. The response from each nation was different this time. Not the let's wait and see of 1971. This was a signal that it was time to move. After 2008, the response from each nation became clear. America cannot protect itself either. The country that made the rules was the first to break them. We tolerated it in 1971. But now it's different. We have to change this system ourselves. If the Nixon shock was the spark, the 2008 financial crisis was pouring oil on that spark. And this is the real reason BRICS strengthened substantially. But wait here. We'll talk about 2008 later. For now, we need to go back to 1971, right at the moment when the dollar seemed about to collapse. How did America save the dollar without gold, with broken promises? That answer is the core of today's presentation. America found new collateral, something that wasn't gold, but something far more powerful than gold. Something the world consumes every day. Something without which industry stops. What that is, we begin now. The dollar had to stand alone without gold. Urgent discussions were underway within the American government. Something new was needed to support the dollar. There was someone who found that answer. Henry Kissinger, U.S. Secretary of State at the time. He proposed one strategy. The birth of the petrodollar system. Kissinger was a cold realist. National interest over morality. Practicality over ideology. He saw the world as a chessboard. What America needed now wasn't sentiment, but one new strategy. and he found it, the Middle East. At that very moment, the Middle East was burning. October 1973, Egypt and Syria launched a surprise attack on Israel. The Yom Kippur War. America supported Israel. Arab nations were furious, and for the first time in history, they wielded oil as a weapon. An oil embargo, the Arab counterattack, had begun. OPEC declared it. They would not sell oil to America. An oil embargo measure. The shock was immediate. Cars lined up hundreds of meters outside American gas stations. Oil that had been $3 a barrel skyrocketed to $12, 4 times in just a few months. The global economy shook. This was the first oil crisis, the nightmare of 1973. But Kissinger didn't see this chaos as a crisis. He saw it as an opportunity. If oil can stop the world, then tie oil to the dollar. Create a world where you cannot buy oil without dollars. He made his decision. He headed to Saudi Arabia. A journey to change history had begun. The meeting between Kissinger and Saudi Arabian King Faisal. The location was not disclosed. The agenda left no official record. But in that room, an agreement that would change history was reached. The content was just 2 lines. Those 2 lines determined the next 50 years. America will protect the Saudi royal family militarily. Saudi Arabia will sell oil only in dollars without exception. This is the petrodollar agreement. Just 2 lines. Yet these 2 lines became the backbone of the world economy for the next 50 years. The dollar survived by replacing gold with oil, and the world became bound by this deal. Why was this agreement so powerful? The logic was simple. The world needs oil. To buy oil, you need dollars. To get dollars, you must maintain relationships with America. Without coercion, every nation naturally wanted dollars. This is the genius of the petrodollar system. It was a perfect loop that no one could resist. It was fundamentally different from the gold standard. Gold was a choice. You could live without buying gold. But oil was different. Without oil, factories stop. Planes don't take off. Armies don't move. Oil wasn't a choice. It was survival. The dollar was tied to survival. Saudi Arabia earned massive dollars by selling oil. Where did those dollars go? They came back to America. They bought American government bonds, deposited in American banks, and invested in American real estate. Dollars go out to buy oil, and those dollars come back to America in a circular flow. This is petrodollar recycling. America earned oil value without buying oil. What was the real collateral that protected this system? American military power. The Strait of Hormuz. 30% of the world's oil passes through this narrow sea lane, which the American Navy controlled. If America blocked this strait, the global economy would stop. No one could fight America. Oil was tied to the dollar, and the dollar was tied to American warships. From 1974 to 2024, for 50 years, this system worked. The world wanted oil, and buying oil required dollars. Demand for dollars was automatically maintained. Oil perfectly filled the space left by gold. No American president in history touched this system. There was no reason to. That was the petrodollar era. But now, cracks are appearing in this system. Renewable energy is replacing oil. China is starting to buy oil with yuan. And in 2024, Saudi Arabia said it would not renew its agreement with America. The pillar supporting the dollar for 50 years is shaking. So what comes next? In part 2, we find that answer. The dollar accounted for 72% of global foreign exchange reserves. Every central bank in the world was stockpiling dollars. It was when the petrodollar system was working perfectly. But 23 years later, in 2024, that share had fallen to 58%. Official IMF data. 14 percentage points disappeared. This isn't just a change in numbers. This is a signal that the collapse of the system has begun. Did euros or yuan fill the space left by the dollar? No. Interestingly, the space was filled by unconventional currencies like the Australian dollar, Canadian dollar, and South Korean won. Rather than choosing one specific strong currency over the dollar, global central banks diversified across multiple currencies. Confidence in the dollar decreased, but there's still no alternative. This is the most dangerous situation: a world economy without a reserve currency. Cracks appeared in action before numbers. February 2022. Russia invaded Ukraine. America and the West immediately froze about $300 billion in foreign exchange reserves held by Russia's central bank. The weapon of war wasn't bullets, it was dollars. The world watched quietly. Everyone asked the same question: could this happen to me too? The response from central banks was quiet but swift. In 2022 and 2023, central banks worldwide bought over 1,000 tons of gold annually, twice the previous 10-year average. China's central bank reduced its holdings of U.S. Treasury bonds from $1.3 trillion in the early 2010s to $780 billion in 2024. It sold over 40%. This wasn't words, it was action. Distrust shown in numbers. June 9, 2024. The Joint Economic Committee Agreement between America and Saudi Arabia, signed in 1974, expired after 50 years. Saudi Arabia did not renew it. There was no official clause mandating dollar settlement, but the framework of practices maintained for 50 years itself disappeared. This was a symbolic signal. The guardian of the petrodollar system ended the contract itself. Saudi Arabia was already moving. December 2022. Xi Jinping visited Riyadh. Xi told Saudi leaders directly, "Let's settle crude oil through the Shanghai Petroleum and Gas Exchange using yuan." January 2023. Saudi Arabia's finance minister publicly stated for the first time that they were reviewing settlement in currencies other than the dollar. That was the signal. The signal of abandoning a partner of 50 years. Concrete action came in November 2023. China's central bank and Saudi Arabia's central bank concluded a currency swap agreement worth 50 billion yuan, approximately $7 billion. The two countries created a channel to transact directly in their own currencies without going through the dollar. And in June 2024, Saudi Arabia officially participated in mBridge, China-led digital currency settlement experiment project. The petrodollar system became no longer the only option, but one of several options. This doesn't mean the dollar will collapse immediately. Even now, most of Saudi Arabia's crude exports are settled in dollars. The global settlement share of yuan is about 4% by SWIFT standards. The dollar is still 47%. Diversification, not replacement. Erosion, not collapse. But the direction is clear. And that direction hasn't changed once in 50 years. Gradual but unstoppable erosion. This is reality. The problem isn't speed, it's direction. When the Nixon Shock hit in 1971, the world couldn't abandon the dollar, because there was no alternative. When the 2008 financial crisis hit, the world couldn't abandon the dollar, because there still was no alternative. But now it's different. The world is creating alternatives. It's not finished yet, but it's being created. That's the critical difference. This time there's somewhere to run to. So what will the world after the dollar look like? Will the yuan become the new reserve currency? Or will some digital system take its place? History always repeats one pattern. The reserve currency that dominated one era is always replaced by the next reserve currency. The florin, florins, sterling, Britain, dollar, America. What comes next? That pattern is the subject of the next part. There is one pattern in history. When a country can monopolistically supply what the world needs most, that country's currency becomes the reserve currency. Spices, Netherlands, manufacturing, Britain, oil, America. And when that monopoly breaks, the reserve currency is replaced too. There have been no exceptions. Not once in all of history. This is the law. So what does the owner of the next reserve currency monopolize? The 17th century. The Netherlands was the world's most powerful maritime trading empire. The Dutch East India Company, VOC, was the world's first joint stock company at the time. It controlled trade routes connecting Asia, America, and Europe. Spices, silk, and porcelain that the world needed all went through Dutch ships. Therefore, the Dutch guilder became the reserve currency for about 200 years. But monopoly was not permanent. But in the late 18th century, the Netherlands lost a war to Britain. The Dutch East India Company went bankrupt. Control of trade routes passed to Britain. The guilder's dominance disappeared with it. The replacement wasn't sudden. It happened slowly over decades, but irreversibly. The guilder disappeared into history within a generation. Today, we only remember its name from history books. The 19th century. Britain took that position. The birthplace of the Industrial Revolution. Britain monopolistically produced cotton textiles, steel, and machinery that the whole world needed. The British Empire's colonial network covered a quarter of Earth's surface. India, Africa, Asia, the Pacific region. All those transactions were conducted in pounds. The world couldn't run industry without pounds. The 19th century was the century of the pound, but it wasn't eternal. But in 1914, World War I began. Britain abandoned the gold standard to cover war costs. When the war ended in 1919, Britain's treasury was empty. It owed America massive war debts. Britain, once the world's largest creditor nation, became a debtor nation. The cracks in the pound began here. The monopoly was broken, and history's wheel began to turn. After World War II, the killing blow came. Britain owed America massive debts again. In the 1950s, 55% of global foreign exchange reserves were still pounds. Yet within 20 years, that share fell by over 10 percentage points. Because an alternative appeared. The dollar. The pound didn't collapse overnight. Over decades, it slowly, but unstoppably, descended. And today, the pound is merely an auxiliary currency. There is a critical lesson here. The pound didn't collapse because Britain suddenly got worse, because the supplier of what the world needed changed. Britain's manufacturing monopoly was overtaken by America. The center of the trade network moved from London to New York. The reserve currency was the result of the shift in economic power. Not the cause, but the result. The currency changed after the economy changed first. This is the law of history. So how about the dollar? The dollar became the reserve currency in 1944 because America held 70% of the world's gold. After that, the world's largest economy, strongest military, and oil settlement system supported the dollar. But now, America's GDP is about 25% of the world total. It dropped continuously from 40% in the 1960s. Meanwhile, China's share increased from 2% to 18% in the same period. The numbers are speaking. The center of economic gravity is shifting. History teaches another fact. The replacement of reserve currencies is very slow. America overtook Britain in GDP in the late 19th century. But the dollar completely replaced the pound only half a century later in 1944. There was a 50-year delay. It takes a long time for a shift in economic power to translate into a shift in currency power. Because there's inertia. So where is China now? The answer to this question determines the future. So where are we now in this timeline? China overtook America in GDP by purchasing power parity in 2014. Official IMF data. If history's pattern holds, the shift in currency power comes decades later. Right now could be the beginning of that transition. The outcome isn't determined yet, but the direction history has already shown. We are now at a turning point in history, and the value of the money in your wallet will be determined at this turning point. If tying oil to the dollar in 1973 was America's brilliant move, China is now executing the same logic in the digital world. create a system where you can transact without dollars. Control payment infrastructure instead of oil. This is China's strategy. CIPS, M-Bridge, Digital Yuan, Digital Silk Road, all heading toward the same goal. Creating a world where the world can move without dollars, and when that becomes possible, the end of the dollar begins. China's central bank began developing the digital yuan earlier than any central bank in the world. It launched official pilots in 2020, and as of November 2025, cumulative transaction volume reached about $2.4 trillion. Official People's Bank of China figures. Wallet count is 2.25 billion, exceeding China's population of 1.4 billion. It's already being executed, creating a world that moves without dollars. That's becoming reality. But no matter how large domestic transaction volume grows, you need an international payment system to threaten the dollar. The current international payment system is called SWIFT. The dollar is involved in 89% of all SWIFT transactions. The yuan is at 10%. To narrow this gap, you need separate tracks operating outside SWIFT. And those alternatives are being created. CIPS, Bridge, and new multilateral payment networks. New infrastructure breaking the dollar's monopoly is quietly operating. That system is called M-Bridge, a multi-digital currency settlement platform with central banks from 5 countries: China, Hong Kong, Thailand, UAE, and Saudi Arabia. When the initial pilot launched in 2022, transaction volume was $22 million. As of 2025, cumulative transaction volume is $55.5 billion, a 2,500-fold increase. Official count from the Atlantic Council. This isn't an experiment. It's an already operating new system. Real financial infrastructure that moves without going through the dollar. The digital yuan accounts for 95% of M-Bridge's transaction volume. And the core commodities traded on this platform are energy and raw materials. Saudi Arabia, which used to settle oil in dollars, is now participating in a settlement platform that doesn't use dollars. The core partner of the petrodollar system has gotten on the alternative track. This goes beyond symbolic meaning to economic reality. The 50-year-old structure being supported is being simultaneously replaced by a new structure. At the end of 2024, the BIS, the Bank for International Settlements, quietly withdrew from M-Bridge. The official reason was that the platform had entered maturity and participating central banks could operate it themselves. But behind the scenes, Russia had proposed the BRICS Bridge initiative to use M-Bridge to circumvent Western sanctions, and BIS wanted to sever that connection. After that, M-Bridge became essentially a China-led platform. The West's last influence disappeared. Now the new order is completely in China's hands. America isn't sitting idle either. The Federal Reserve is conducting Project Agora with 7 central banks. Central banks from France, Japan, South Korea, Mexico, Switzerland, and Britain, plus the Federal Reserve Bank of New York are participating. Experimenting with next-generation payment infrastructure that combines tokenized deposits and central bank digital currencies on a single platform. America's strategy of laying down the digital rail based on the dollar first. M-Bridge versus Project Agora, yuan-based versus dollar-based. A new generation currency war is underway. There is a critical difference here. Oil can be verified. You can measure barrels, and governments can't produce it arbitrarily. But digital currency is different. The issuing entity can print as much as it wants. It can block specific transactions or freeze accounts. China's ECNY operates offline, but all transaction records concentrate at the People's Bank of China. This is what the West is most concerned about. The shift from currency sovereignty to currency surveillance. This isn't just technological innovation, it's a wholesale transformation of state power. So can digital currency replace the dollar? As things stand, the numbers are cold. M-Bridge's $55.5 billion is only a fraction of daily SWIFT transaction volume. The yuan's 10% global settlement share can't compare to the dollar's 89%. It's not direct replacement. But as the Atlantic Council's analysis shows, a parallel track that reduces dollar dependency is being created. The dollar is still overwhelming, but for the first time, it's possible to transact without the dollar. That's what's decisive. History says, when a new system replaces an old one, no one takes it seriously at first. When the Dutch guilder dominated, the British pound was a peripheral currency. When the pound dominated, the dollar was the currency of an emerging nation. Where are the yuan and digital payment systems now? The answer is what the next chapter, the pattern of history, will tell us. Concluding part 2, we've reached one certain fact. Whatever comes after the dollar, the value of the money in your wallet will be determined by that transition process. For the first time, the share of global oil transactions settled in non-dollar currencies exceeded 20%, a figure that was nearly 100% just years before, the moment the petrodollar system revealed its first substantial crack in 50 years. That share likely grew in 2024. Speed is accelerating. Erosion is quickening. You cannot fight the flow of history. China and Russia moved fastest. As of 2024, over 90% of bilateral trade between the two countries is settled in yuan and rubles, a complete reversal from the dollar-dominated situation until 2022. The Ukraine war and Western sanctions accelerated the pace. Unable to use dollars, they created alternatives. This is history's paradox. The sanctions meant to control the dollar accelerated the collapse of the dollar's reserve currency status. Your own weapon turned against you. That was the moment. China created an alternative to SWIFT too, CIPS, the UN International Payment System. As of January 2025, 185 countries with 4,800 banks are connected. Starting from 19 countries at launch in 2015, it expanded to a global financial network in 10 years. It still hasn't reached SWIFT's scale, but the direction is clear. SWIFT versus CIPS. Dollar rail versus yuan rail. Everything is being duplicated. A new world financial order is being built alongside the existing order. When the replacement happens is uncertain, but that it will happen is certain. India moved too. August 2023. Indian Oil, India's state-owned company, and ADNOC, Abu Dhabi's state-owned oil company, settled crude oil transactions in rupees and dirhams instead of dollars. For the first time in history, India-UAE crude oil was transacted without dollars. May 2025, ASEAN's 10 countries officially agreed on a framework to use their own currencies instead of the dollar in intra-regional trade. China, India, Russia, the Middle East, Southeast Asia, more than half the world's economy is moving, creating a world that moves without dollars. It's no longer China's strategy alone, it's becoming a global phenomenon. But Harry's an important fact. You've heard BRICS wants to create a shared currency, right? In 2023, Brazilian President Lula strongly advocated for it, and Putin even held up sample banknotes at the 2024 Kazan summit. But in the final declaration from the July 2025 Rio de Janeiro summit, there wasn't a single mention of a shared currency. Why? That reason tells us reality. A shared currency is impossible. Too many interests are tangled up. But an alternative is possible. Dollar bypass. Regional currency trading. That's the feasible path. Trump did it. December 2024. Trump publicly warned that if BRICS countries pursued a shared currency to replace the dollar, he'd impose 100% tariffs. The effect was immediate. Lula quietly deleted the shared currency from Brazil's 2025 BRICS presidency agenda. Putin also stated publicly in November 2024 that Russia had never tried to abandon the dollar. The dollar's last weapon was tariffs. Resisting as it loses position as a reserve currency, it still fights with the fact of being the world's largest market. This is America's reality, weakening, but still strong. This is the real strength of the dollar. America doesn't need to go to war to protect the dollar. One tariff is enough. A shared currency project that BRICS countries prepared for decades got shaken by one Trump tweet. The dollar's hegemony isn't simply economic superiority. It's the power to suppress challenge itself. Economists call this path dependency. Once you become a reserve currency, The cost of maintaining that position is far lower than you'd think, because the world is already addicted to the dollar. But suppression can't stop the trend. The shared currency stalled, but local currency settlement expansion continues. In 2024, central banks worldwide bought 1,045 tons of gold, 3 straight years exceeding 1,000 tons annually, meaning they're stockpiling gold instead of dollar debt. It's action, not words. No matter how powerful Trump's tariff threat, the world is quietly moving. A return to physical assets. This is a signal of deep distrust in the dollar. It means they feel that paper currency alone is no longer enough. India is a symbolic example. India is a BRICS member but opposes China-led single currency. It wants to reduce dollar dependency, but it wants even less to depend excessively on the yuan. This is the essential dilemma of de-dollarization. You want to escape the dollar, but if the alternative is China, it's hard to move swiftly. Russia is the same. That's why Putin said Russia never tried to abandon the dollar. Depending too heavily on the yuan is risky too. The transition from unipolar to multipolar regime is happening this complicatedly. In that confusion, a new order is being born. So how will the dollar ultimately fare? There are 3 scenarios: rapid collapse, gradual weakening, or continuation in a new form evolved digitally. What pattern does history show? And what will happen to the money in your wallet? Depending on which of these 3 scenarios becomes reality, the economic order of the coming decades will be determined. Your savings, your investments, your future will be determined. Concluding part 2, we've reached one certain truth. Change has already begun, and the question of what individuals can do in that change. That's the subject of the next part. We've gone through 3 chapters: the birth of the petrodollar, history's pattern, and the cracks appearing now. Now the final question: what will happen to the dollar? There are 3 scenarios, and all 3 have basis. First, rapid collapse. Geopolitical conflict or unpredictable events could serve as catalyst. Second, gradual erosion. If the already underway change continues, dollar dependency will slowly decrease over 50 years. Third, digital evolution and continuation. If America builds digital dollars first and establishes new standards, the dollar can continue to dominate in a new form. Which will be reality? Which scenario do you predict? First scenario: rapid collapse. This is not unfounded fear. America's fiscal deficit is $1.83 trillion as of 2024. Official U.S. Treasury figures. National debt exceeds $38 trillion. Ray Dalio calls this the final stage of the debt cycle, the vicious circle of debt. A structure where you borrow more to pay existing debt. Why Nixon abandoned the gold standard in the 1970s. Why the 2008 financial crisis happened, all the same reason: unsustainable debt. That vicious circle is repeating now, and this time there's no new collateral to support the dollar. Dalio says this: the likelihood of America declaring default is low. Instead, it will print dollars to pay debt, and the result is currency value decline. In 2025, the dollar actually fell 39% versus gold, a figure specified in Dalio's year-end report. The S&P 500 rose on a dollar basis but fell 28% on a gold basis. What you measure with determines entirely different realities. This means your savings may increase in dollars, but your actual purchasing power may decrease. This is the actual mechanism of reserve currency collapse. Not collapsing at once, but value gradually evaporating. But the rapid collapse scenario has a decisive counter-argument. There's still no alternative to the dollar. UC Berkeley professor Barry Eichengreen concluded in joint IMF research this way: 3/4 of funds fleeing the dollar went to unconventional currencies like the Australian dollar, Canadian dollar, and South Korean won, not euros or yuan. There is no rapid replacement by a single alternative currency happening. What does this mean? The world is leaving the dollar but doesn't know where to go. That's the biggest factor preventing rapid collapse. In chaos, sudden change doesn't happen. Second scenario: gradual erosion. The scenario Dalio thinks most likely. He said explicitly, this isn't a crisis event. It's a long, continuous adjustment. There is historical precedent too. The pound was the reserve currency for decades after Britain was overtaken by America in GDP in the late 19th century. The dollar could follow the same path. As of 2024, it's already happening. The dollar's share in foreign exchange reserves is falling, non-dollar transactions expanding, central banks buying gold. All slow but unstoppable change. If this scenario is reality, the next 50 years will be the dollar's gradual exit. In this scenario, the dollar doesn't collapse. Instead, its relative share shrinks from today's 58% to the 40% range, and the yuan and unconventional currencies divide that space, from unipolar to multipolar regime. Eichin Green calls this stealth erosion, invisible corrosion, quiet but unstoppable change. You won't feel this. It won't make big news. But 30 years from now, your assets will look the same in dollars, but your actual purchasing power will be far diminished. This is stealth erosion's danger. Third scenario. Dollar continuation evolved digitally. Possible if America maintains overwhelming superiority in AI, semiconductors, and digital financial infrastructure. If the Federal Reserve's Project Agora succeeds, the dollar-based digital payment rail could become the global standard before Enbridge. Just as petrodollar tied oil to the dollar, digital dollar ties global payment infrastructure to the dollar. This is possible because of America's technological superiority. In semiconductors, software, cloud infrastructure, America is still world-leading. If America establishes the digital standards that will be the foundation of the new currency first, the dollar could dominate in a new form for another 50 years. This scenario has basis too. The depth of America's capital markets remains world-leading. The American Treasury bond market is the world's most liquid safe asset. Even Dalio admits, absent clearly superior alternatives, the dollar maintains its center as the default option. The question is how long that default lasts. That's the core of the third scenario. The dollar might not collapse, just its dominance reduces. But your assets, your future will be greatly affected through that process. Whichever scenario becomes reality, unprepared individuals will suffer major losses. That's the question covered in the next part. What can you do? No one knows which of the three scenarios will become reality. But one thing is certain: direction. The dollar's absolute position is already changing. When the Nixon Shock hit in 1971, the world tolerated it because there was no choice. After 2008, the world began creating alternatives. As of 2024, those alternatives are actually working. Not perfect, but they exist. That's the critical difference. Now the world has choices. It's slowly but choosing. Concluding part 2. What we've reached is this. No matter where your money is, what it's in, its value will be determined by this transition process.